Hi, this is Hutch with Life-Insurance101.com, and today we're going to talk about the age-old debate between term versus permanent life insurance. And we're going to do so using an analogy that most everyone will understand, and that's the difference between renting versus owning property. We're also going to discuss something called convertibility, which is a feature built into most term policies that gives the renter the option to buy at any time throughout the length of that term. So what term is it's a temporary agreement between you and an insurance company where they will provide you coverage for a fixed period of time, say like a 20-year term. And this is usually preferred by clients because it's perceived to be cheaper than permanent. Permanent life insurance, on the other hand, is lasting in that it lasts at least as long as you do, and it's often misunderstood as being expensive because the payment will be considerably higher than any term policy. Now, if we looked at the same analogy through the lens of acquiring property, we wouldn't say that it's expensive. What we would say is that owning property may require a higher payment than renting. But when we rent a property, once we're done with our use of that property, we get no refund for our rent payments, and we have no value in that property. So coming back over here to your permanent payment, although it's a higher payment, you're also building equity in your policy. And very similar to home ownership, as you make these payments, the faster you make the payments, the more payments you make, and the bigger the payments are, the more your equity is going to grow inside your policy. And every permanent policy, regardless of what type it is, has some sort of growth mechanism built into that policy. So certain policies are very conservative for conservative growth, some are more high performance, but every permanent policy will have some sort of way to make your equity grow inside that policy. There's also its own set of tax perks that come along with owning permanent life insurance. So very similar to how owning real estate has its own unique set of tax advantages, so too does owning permanent life insurance. And the reason why the government does this is because they figure if you have life insurance that doesn't go away, they're going to be less likely to have to take care of your family if you pass, or if you're covering a business, they're going to be less likely to have to dole out unemployment checks for your employees. So let's talk about access and use of your equity while in permanent life insurance. So unlike with home ownership, where the only way to access your equity is to either sell and liquidate the property or to acquire a loan against it, with permanent life insurance, you can withdraw your equity at any time for any reason. And as long as there's enough growth in there to sustain the policy, it will continue. Now, there's also a loan provision that comes with every permanent life insurance policy. And this is a contract that you set up with the life insurance company when you take out the policy. And basically, they agree to hold your equity as collateral and lend you money at very favorable and flexible terms without any credit checks, without knowing any reason. They will loan you the money. So some of you were saying, hey, that's all fine and good. I'd sure like those permanent benefits, but I can't really cash flow the higher payment. So what we suggest then is renting with the option to buy. And what that means is your term policy has a convertibility privilege, assuming you got a quality product from a quality company that allows you to basically flip the switch. Yes, that's a switch. You can basically flip the switch at any time during your term. So if you got a 20-year term, at any time during those 20 years, you could basically convert your term policy to a permanent policy. So another way to look at convertible term would be like renting a plot of land, say worth $500,000, and this would be equal to your death benefit. Only in the terms of your rental agreement, you actually have the contractual right to build upon that property. And you can do so at any time during your rental term. You can do so for the full amount, and all future payments will begin building equity in that property. Or you can do so for a partial amount. Say you wanted to keep $250,000 of term, but 5 years into your term you wanted to convert $250,000 into permanent. Well, you can certainly do so and just start building a smaller property on the sliver of land you wanted to convert. And when it comes to choosing a convertible term product, it pays to know something about what kind of neighborhood you're going to be building in. This would be comparable to the insurance company's financial strength, as well as how capable the builders are. And this would be similar to how competitive that insurance company's permanent products really are. At life-insurance101.com, we represent only independent agents around the country who can match consumers with the most competitive companies and products to fit their particular health and financial situation.